you're exposed to that risk, like completely. There's no safety net, like there's no inherent stop loss that's built in. You need to understand that that is what you're signing up for. And so if you don't know that, it can make the drawdowns incredibly difficult to handle because you get surprised and you find yourself kind of searching for what you do next.
So my guest today is one of the most recognizable educators in retail trading. He's known for simplifying complex options strategies and doing it with unmatched energy and heart. Known as the Doctor from his PhD, a longtime face of Tasty Live, and someone who blends discipline, data, and a deeply personal approach to finance. Please welcome the one and only Dr. Jim Schulz.
Man, what's going on, man? It's really exciting to be here with you today, Rich. And it's a long time coming, our being able to connect here. And I'm excited, man. I'm excited to see where we go today. And it's been quite a ride with Tasty for the last 10 years.
So yeah, I want to dive straight into that really, because across in London, our viewers are only just getting to know you guys. You know, you're celebrities in Chicago, you're celebrities around America. But for those over in London, in the UK, please introduce yourself.
Yeah, so, Jim Schulz, I've been studying finance for, 25 years now. And so I grew up in the eastern suburbs of Detroit, Michigan. And, just a middle-class family, lived in a very normal neighborhood. My dad worked all the time. My mom stayed home with me and my three sisters. And so I was actually the first one to go to college in my family. And so I went to undergrad, MBA, and PhD all the way through finance all the way. And then I graduated in 2009, and I graduated from the University of Memphis. And I finished my doctoral work, and I left Memphis with two things, with a PhD in finance and the most wonderful woman in the world as my wife, Autumn. And so I took my first job as a professor in a small university in South Carolina, and I taught there for about 6 to 6.5 years, I want to say. I taught undergraduate classes, I taught MBA classes, and it was amazing. Like, I thought that was what I was going to do for the rest of my career. Yeah. And then in 2015, I met Tom. Like in 2015, I started kind of getting to know Tom, and, one thing led to another. And I was like, maybe I could join the team there and be a part of what you guys are doing, because I was like, man, I can always teach. I can always go back and teach, at the university level, whatever. But This looks like a once in a lifetime opportunity. And so I got to know Tom. He gave me a shot. The rest is history here 10 years later. So that's,
Absolutely.
That is like the Cliff Notes version of kind of my story.
And where was that first meeting with Sosnoff then?
Yeah, so I met Tom in Chicago first. So I was in Charlotte, North Carolina, and I was still teaching. And I got to know Tom via email, which is how most people get to know Tom. And then eventually I was like, hey, I think I can help you guys out. Let me come to Chicago. Let's sit down. Let's talk it out. And let's just see where it goes from there. And so I flew to Chicago, sat down with Tom, and that's how our courtship began back in 2015.
Oh, fantastic. Now, I have noticed you've got a certain energy on air that is just, completely your own. And you managed to do those, is it 1 hour shows all by yourself?
It's 45 minutes. It's 45 minutes. Yeah.
And so, has that always been there from teaching, or is that something that you've managed to build up over time on air?
Yeah, that's a great question. And I'll tell you, so if we go all the way back, oh, Rich, you're taking me back this morning, man. I wasn't ready for this. If we go all the way back to like 2006, so that would be, for people out there that have been in a doctoral program, like, you'll recognize what I'm going to say here in terms of like what you do with your workflow. But most people are not familiar with kind of what you do in a doctoral program. So typically you do 1 to 2 years of coursework. At about the 2-year mark, you take your exams. You take an oral exam and a written exam. The oral exam is basically like, the study guide is finance. Like, that's it. Like, you have to be able to address basically anything in the field of finance coming from your professors and your dissertation committee and all those things. Then the second 2 years, or the last 2 years, I should say, is when you work on your dissertation. And that's when hopefully, you put together something that's reasonably worthwhile and they let you out. And then you get to, go off into the forest on your own. Well, right around the 2nd year mark, that's when you typically start teaching classes. You're doing research, you're teaching classes. So I started teaching classes in 2006, and Rich, let me tell you something. It was a train wreck. Oh my gosh, it was a train wreck. Oh my gosh. I got up there, I mean, lecture halls, 80, 100 students, whatever, and they just torched me. Man, they just blew me to smithereens. And so I realized, I was like, man, I'm either going to sink or I'm going to swim. Like, I'm either going to sink to the bottom or I've got to rise to the occasion and become way better than I currently am. And so what started to happen was I started to really arm myself and equip myself with what I thought I needed to, have the answers to my students' questions and just have a really firm grasp on the material. And because of that, I think it gave me a lot of confidence. And from the confidence, that's kind of where I think the energy and the enthusiasm was born.
Right. So it was in the face of potential failure that you kind of reached deep and realized that you had to be engaging, that you had to really draw the students in.
That's right. That's exactly right. Because it's like, I'm the only one up there. It's like, I remember I used to walk into class. I was 20, let me think. I was 25, I guess, 24, 25. And I would walk into class and my students would look at me and they'd be like, he's the guy that's going to teach us? He should be sitting next to me. Like, why is he up there? And so I realized, I'm like, man, no one's coming to save me in here. It's just me. I've got to manage all this myself. And so it really, really forced me to kind of up my game. And so, man, I give so much credit to my students. Oh my gosh. Especially those early years, they really, really forced me to be the best version I could be in the field of finance. And so having to face that adversity pretty much every single day was quite an opportunity for growth for me.
And so did you teach options, or is that something that has progressed, since?
Yeah, it wasn't option specific. In fact, I taught very little option specific material pretty much my whole time as a grad student, doctoral student, and then even as a professor. We taught some options. They would show up in like in investments class. I think there was maybe one semester I did a derivatives elective. I can't remember exactly. I think maybe I did it one time. But most of the time it was very corporate finance based. It was very principles of finance, net present value, some investment stuff. But in the field of investments, you're doing modern portfolio theory, which is a misnomer, by the way, because it was written in 1962 and it hasn't been updated since. And so you've got that, you've got the Sharpe ratio, you're doing like those kinds of things. You're not really doing anything from an active trading standpoint, whether it be derivatives or anything else really. And so that honestly is what drew me to Tasty. And I was like, man, what they're doing is changing. This is going to completely, revolutionize finance for the retail trader. And so that's why I wanted to be a part of it.
And, since then, that's exactly what you've done. So take us through the sort of the events that you host, specifically the one earlier this year, which was fantastic.
Yeah, so I've done some live bashes. Yeah, we did the live bash earlier this year, the beginner trader, and that was amazing because we got to do it to a live audience, which was super fun the night before, and then I did the recording the next day, which was really, really great. And then later this year, I'm doing an options crash course live. We're going to 3 cities. We're going to Boston in July, which is just coming up in about 6 weeks. Then we're going to Detroit in October, and we're going to Tampa Bay in December. And so I'm really excited about it because there's just nothing like being in front of a live audience, which I know that you know very well yourself. And so the energy is amazing. The rapport is amazing. You're kind of able to see like, all right, is what I'm saying, is it making sense? Is it not making sense? And again, I like that for me personally because it takes me back to the classroom. It takes me back to the classroom. I love what I do every single day, from theory to practice, being on camera, being on air, whatever. But nothing can replace the face-to-face interaction in a learning environment. Because it was always a very special thing for me as an educator to actually see the light bulbs go off.
That's it.
Like you just see a little flicker, you're not getting there, then all of a sudden the light bulb just goes off and it starts to make sense. And to see that live, there's just nothing comes close to that, in my opinion, as an educator. So that's why I'm so excited for Boston, Detroit, and Tampa Bay coming up this year.
And often when you're on with Sosnov, he'll bring up a point or an argument, and you remind him, if only there was a show that took you from theory to practice. Just walk us through exactly what you try and do in that show.
Yeah, so I have to give a quick shout out to my father-in-law because he's the one who named the show. So this is a really funny story. So in 2015, right, I meet Tom. We're exchanging emails. I fly to Chicago a couple of times. It's like the fall of 2015. It looks like, all right, this is really going to happen. I'm going to join the team. We're going to move to Chicago. Like, this is going to be so exciting, whatever. And Tom said, he's like, all right. He's like, you're going to have your own show. It can be whatever you want it to be. He's like, you just got to let me know what you're going to call it. Yeah. And I had no idea. I came up with all these crazy names. I can't even remember them anymore. But then we were sitting at our kitchen table in Charlotte, North Carolina. It was maybe 2 weeks before we were set to move to Chicago.
Wow.
I'm sitting there with my wife and her dad, so my father-in-law. We're talking about it, how excited I am. But I told him, I said, Steve, I'm just I'm so concerned because I don't have a good name for the show, and we need something that's catchy. I need something that people are going to remember. He didn't even hesitate. He goes, from theory to practice, and I was like, man, I like that. He's like, hey, you're an academic. You're leaving academia to kind of show people how it really works. You're going to kind of blend the two things together. I was like, Steve, this is great. So I sent it to Tom later that night. He's like, I love it. That's it. And so it's been from theory to practice for 10 years now. So I had to give a quick shout out to my father-in-law because he named the show. But that's basically what it is, right? Like, the thing that's been so fun and exciting for me being with Tasty is I love the classroom and will always have a special place in my heart. But the thing about it was, Rich, is, I'm in class and the students are learning and they're excited to learn, and I tried to make it engaging and fun, but still they're just learning to pass the class. They're just learning, to move forward in their academic career. Most of them are not even going to major in finance. Most of them are not even going to do anything in the investments world. Well, I joined Tasty, and all of a sudden, you want to talk about having to bring your A game. You want to talk about having to rise to the challenge. All of a sudden now I'm like, man, there are people on the other side of that camera lens. There are people in the audience at the live shows. Like, they're basing dollar amounts behind what I say. Sometimes 6 figures, sometimes 7 figures, sometimes 8 figures, 5 figures, whatever it is. It's a significant amount of money. Yeah. So all of a sudden I realized, man, we're not talking about A's and B's anymore. Like, we're talking about some really, really serious stuff. And so when I thought about the show, I was like, man, there's just so many things in academia with all the models and the theories and whatever that actually matter to us as retail traders. Some of it matters on the front lines, like the decisions that you're going to make, on a given day. Some of it matters more as kind of background information, but a lot of it really, really matters. And so on the show, that's what I try to do, is blend those two worlds together and show the people that are watching that this isn't just about some textbook. This isn't just about some, archaic theory that nobody has thought about for 60 years. This actually matters to you, and here's the reasons why.
Great. Now, for our viewers, mostly going to be across here in either UK or Europe, we haven't grown up with that availability to the options market. And it's just not as liquid across here. There's not the same kind of knowledge or availability. What do you think is the best starting point to bridge that gap and to get the UK more interested in trading options?
So you mean, what is the best starting point in terms of like strategically, or what is the best starting point in terms of like access?
I guess to the people watching, that it all seems a little bit too much for them, too advanced. Sell it to them, Jim.
Yeah. Okay. Well. Okay. Got it. So it's strategically. Got it. Here it is, Rich. This is exactly where every single one of your viewers, of our UK audience, of the people that are across the pond, this is where they should all begin. 100%, 10 out of 10. Here you go. The covered call strategy. This is it. So you can write that down. You can make a note. You can hop into the Tasty Live archives later on today or this weekend or whatever, and you can learn more about the covered call strategy. Here's the reason why. A lot of investors across the world, whether it be US, UK, Australia, whatever, you're familiar with owning stock. You're familiar with owning some type of mutual fund, index fund, individual stock, whatever. That is comfortable for you. You understand that landscape. I buy it, the stock price goes up. I buy it, the stock price goes down. I make money, I lose money, etc. The covered call is great because, yes, you are correct. the world of derivatives and the world of options and futures, it's very complex. It's very overwhelming. There's so many different things that are happening. With a covered call strategy, the strategy actually begins with long stock. It actually begins with something that you're probably already familiar with. So you're going to have that comfort. You're going to have that familiarity that you wouldn't have with other strategies that don't involve long stock. Now, on top of that, you're going to add what's called a short call. Now, that changes the dynamic in some significant ways. And I'm not going to get into that now because that's not really the purpose of what we're doing here. But it's going to give you that comfort that you wouldn't have in other strategies. And then you can start to learn the subtleties and the nuances. And the profit loss diagram is not that dissimilar from just holding long stock. It's a better play strategically. It's a higher probability play, but you still have that familiarity of long stock. So that's 100% where I would start. And then from there, you can do all the crazy stuff, Rich. Like you can do the Rich McDonald strategies where you're selling straddles in gold, right? You're doing strangles in Bitcoin. You can do all that stuff later, right? It's not a race. It's not a competition. Right now, start with the covered call. I think it's a great start.
And then what are your learnings from both, back in the days teaching finance and then adding the options expertise on top? What do you think is the one single message you would like beginners, both to investing and trading? What would you like to get across to them?
Yeah. So, and you kind of alluded to this a couple seconds ago. So I think that the number one best thing that I can suggest to people that are just starting out is you have to know what you are signing up for. You have to know what you are signing up for. You have to understand what you're getting yourself into. Now, right now, there's no way that you could possibly know that because you don't know what you don't know, right? So there's no way you could possibly know that. But later on down the road, you want to be very clear on what you're signing up for. Like, what are the risks? What are the benefits? Right? What are the gimmies and the gotchas? That's one of the things I love to say on my show all the time. For every gimme, there's a gotcha. Like if you're going after a gimme of a high probability, there's a gotcha there. You have to understand that gotcha.
Nice.
And so the reason
before. I like that.
Yeah. The reason why I bring that up now is because any time that you spend as a beginner trying to better understand the ins and the outs, the gimmies and the gotchas, what have I signed up for, that is going to be very, very fruitful investment on your behalf. I've just learned that there are many, many, many traders, even still today, that don't quite know what they've signed up for. They don't quite know, what have I signed up for? What are the gimmies and the gotchas? What are the risks and the benefits? And so I think that would be the best possible way to start as a beginner. Just keep a little file in the back of your mind. What have I signed up for? And keep trying to work to that end to really understand what it is that you have signed up for. And I think that that's going to make things less overwhelming. I think it's going to lead to faster, mastery of the material, which is kind of that's what we're all trying to get to.
Amazing. Inevitably there's drawdowns along the way, isn't there? How have you, as you're, in your own trading journey, how do you learn to cope with those drawdowns that a lot of people might have seen in the past 6 weeks, for example, or it could have been COVID? There's been many situations that are, they've been really tough to avoid. So how do you manage that personally to deal with those?
Yeah, so it's so interesting that the timing of this interview is you asked me this question right after the previous question, because the answer to this question actually highlights the importance of what I just said. You have to know what you've signed up for, right? This will help you immensely when it comes to drawdowns. For instance, like one of the strategies that we love to use, at Tasty and as premium sellers, option traders, whatever, is a short strangle, right? Now, again, this is way down the road. Don't worry about this yet if you're just starting out. Start with the covered call and then go from there. But the short strangle is an unlimited risk strategy on both sides of the market. You have undefined risk on both sides of the market. So what that means is if there's a big move in either direction, whether it be up, because of, like when Trump, tweeted out, hey, you should buy stocks. And then there was the 90-day pause and the market ripped up 10%. Or even prior to that, you had a couple of days of like 2, 3, 4% down each day. you're exposed to that risk, like completely. There's no safety net. Like there's no inherent stop loss that's built in. You need to understand that that is what you're signing up for. And so if you don't know that, it can make the drawdowns incredibly difficult to handle because you get surprised and you find yourself kind of searching for what you do next. But again, if you understand what you're signing up for, it actually helps the drawdowns immensely because you're like, all right, this is part of the game. This is part of the game. Like, this is what I've signed up for. So what am I going to do next? Like, what's my next move? But this should not come as a surprise to you. And then what happens is when you have big moves like that, you know, the term I like to use a lot, or the thing I like to say a lot, is it exposes you. It exposes you. So it's not too different from when I was in the classroom. When I was in the classroom teaching the first couple times, I was exposed. The spotlight was on me and all of my flaws and all of my mistakes and all of my lack of understanding. It all came out and there was nowhere to hide. It's the same thing with a short strangle, a futures contract, whatever you're engaging in that's fairly high risk. When there's a big move, it exposes you. Okay, now all of a sudden, how small were you really with your position size? How small were you really with your overall capital allocation? You're going to know very, very quickly. And so it can be an incredible learning opportunity for next time. But again, it all traces back to knowing what you've signed up for. So when it comes to drawdowns specifically, that's incredibly valuable to help to handle the drawdowns and stay poised. Stay poised, stay calm, and be able to execute on your strategy.
And this is why part of the Tasty mantra is begin small and take lots of small positions, because then it's a little bit harder for you to trip yourself up, isn't it, if you're not in anything specifically too big.
That's right. That's exactly right. I mean, trade small, trade often. That's exactly right. I mean, we want to feed a lot of small trades into the data set to allow the probabilities to work over time, right? I mean, if you start trading too big and you're trading more infrequent, yeah, it might work, it might not work, but you're not really leaning into the probabilistic, outcomes that we're really trying to tap into. And so that is exactly right. Trade small, trade often. But again, still, you don't really a lot of people don't even know. This is something Tony Batista says all the time, and it's great. You don't really understand how small is really small. A lot of people don't really know what is small until they get exposed, until they get caught with their hand in the cookie jar. Yeah. And then all of a sudden it's like, okay, now I know what I thought was small was probably still a little bit too big. And so again, it's a very interesting dynamic when the spotlight gets shown on everybody, and then you get to see, all right, does the emperor have clothes on or not? Like, you're going to find out real quick.
Yeah, Buffett's when the tide goes out, then you find out who's got their trunks on.
That's correct. That's 100% right.
Now, I think a trading psychologist that we had back in the Credit Suisse days, he said it best. He says you know a size of a position and you know if you're too big, because if you start to pray, then it's probably already too late. It's time to get the stop losses in. And that takes me perfectly into my next question. You mention your faith sometimes live on TV, and it's something that I picked up on. How does that faith help you navigate your trading?
Yeah, that's a great question. So that's a really good question. So as a Christian, I am 100% all in on Jesus as my Lord and Savior. And for me, what that does is it allows me to go forward boldly into the world and do what I think is right and do what I think I can do to the best of my ability, because I know that my hope is ultimately secured in the cross. And I know that my future is ultimately secured in what he's already done for me. And so that honestly, the number one word that comes to my mind whenever I think about, my faith, whenever I think about what Christ has done for me, it's freedom. It gives me unbelievable freedom to go forward into the world and just try to do the best I can for God's kingdom. And so to me, that is way more important than a strangle. It's way more important than a drawdown, to be perfectly honest with you. But it helps me so much with those things. And I mess up and I make mistakes and I do too much here and I do too little there. I do the same things that we all do. But at the end of the day, to be able to think back, like, all right, everything is going to be okay because of what he's done for me 2,000 years ago, That's the one thing that I keep coming back to almost on a daily basis. And the beautiful thing is, Rich, the days that I do forget, which is often, my wife is right there to remind me, which is very, very, very helpful.
Excellent. But there are quite a few of those values that overlap, aren't they? Like patience and discipline. Very much part of his teachings, but also, what can stand you in good stead in trading.
Yes, I would say self-control, 100% self-control. So when you think about, the fruits of the Spirit, which I think Paul writes about in Galatians, it's either Galatians or maybe Corinthians, but the fruits of the Spirit, right? You've got self-control. I think for a trader, that might be the one that would stand above the rest. Because at the end of the day, I mean, the math is the math. At the end of the day, the probabilities are the probabilities. And I feel very good about what I'm engaging with mathematically. But the question becomes, all right, what about what's happening inside of me emotionally? What about what's happening inside of me in terms of my, my behaviors? Am I going to be able to actually execute the plan? Am I going to be able to actually do the things that I know that I should do? I really think it all comes down to self-control. And I mean, it's one thing to have self-control when everything is working and you've just got winter after winter after winter and everybody's strawberries and sunshine. But what happens when, you're short on that 10%, Trump tweet, rip higher? That's not so fun anymore. So now the self-control gets exposed. Or when you're long and, the liberation day happens and the market just falls through the floor, right? Once again, do you have the self-control necessary? And it's an ongoing thing. Like I certainly I'm not batting 1,000. Nobody's batting 1,000. But I think as we try to grow and as, we are, as Christians, as we're sanctified, these things should become better and stronger and more powerful over time. And so as a trader that is overlapping with those Christian values, I would have to say the self-control would be the number one.
Taking that in, which option strategies would you say best captures your personality?
Yeah, that's a great question. I would have to say, that's such a good question. I would have to say probably the undefined risk ones, which are going to be the short strangle and probably the put ratio spread. Those would be my number two. Well, actually, I'll throw the short put in there too. It's really hard for me to pick which one is best because I rotate. It's going to be one of those three: short strangle, short put, or a put ratio spread. And so for me personally, I've usually been more risk averse in my life. Generally speaking, I'm more of a risk averse person just by nature. But when it comes to certain things, I'm not. And it's kind of a weird dichotomy. It's a weird blend. Yeah, I can't really explain it. I don't know. Like when I drive, like I'm a very, very risk averse driver. In fact, I'm so risk averse, I'm actually a bad driver, Rich. I'm terrible. Like I'm just letting you know right now, if it's ever you and me on the streets of Milan, man, you should find another driver, 100%. But when it comes to investments, maybe it's understanding the risk return profile. Maybe it's understanding betas and understanding alphas and understanding what we're trying to go after. I just naturally start to head towards the end of the curve where the returns are greater, but the risks are greater. And I just think that the payoff can be so much more substantial, for us as traders, that I tend to gravitate to those.
Great. I do a lot. I love a put ratio spread. Just gives you that, I'm bullish down here, but I want to participate in the way down. So yeah, gives me I'd say that's probably one of the most common ones I've used throughout my career, as well as now trading with my own funds as well.
It's a great strategy because, again, like you just said, you kind of have opportunity on both sides of the market. And so that's what makes it so fascinating. It gives it so much flexibility that is really hard to find in a lot of other strategies, even the strangle. The strangle is amazing, but man, the put ratio just unlocks a whole new world of management and opportunity, and it's second to none in my opinion.
Now, for those people at home that want to learn more about what a strangle is, what a put ratio is, how do they find your wonderful live show on the old internet out there?
Yeah, so I'm live every day at 2 o'clock Eastern from theory to practice. And so you can watch the live show. If you missed it on the live show, it's 45 minutes or 2 to 2:45. If you missed it on the live show, you can always watch it in the archives. I've got archives going back, again, 10 years now. So if you want to see some really, really, really bad stuff, go back to the first couple shows. Man, they're really, really bad. And then hopefully we've grown a little bit over the years. But yeah, I mean, from theory to practice is every day at 2. Monday mornings at 9:40 Eastern, I do a show with Tom and Tony called The Skinny on Options Abstract Applications. And this is where we really try to push the envelope on some of the like higher level theoretical things and tie them into trading and tie them into derivatives. And sometimes we do a better job than others, but we're trying to reach to better understand some of like the crazy theories that are out there and how they might apply to us. I've been doing that now with Tom and Tony for about 6 years, I guess. And so that's every morning at 9:40. And then those are my two. What's that?
I'm surprised that that one's not, that part of the show isn't called Teaching Old Dogs New Tricks.
You know, it should be. It should be. But Rich, I've tried, and you know this because you've been out with Tom a number of times. You can't do it, man. You can't do it. Like, you're giving me an impossible task, right? Like, give me
anything, Dr. Jim.
No, nothing at all. And so, that's so funny. And so those are my two live shows. But honestly, Rich, you know, for people that are out there that are just checking us out for the first time, go into the Tasty Live archives, and there's so much material, right? I would test out a few different shows. I'm obviously biased towards mine. But hey, check out Liz and Jenny. Check out Mike, Nick, and Katie, right? Check out Jamal. Check out Chris and Ilya. Like, check out a few different personalities, and then you're probably naturally going to gravitate towards one or two of them. I would sink into their content in the archives because you've already kind of latched on and synced up with the way that they explain things. I think that will make your learning a lot more effective because one of the things that I think is a huge benefit to what we do at Tasty, but a lot of people might view this as a drawback, is we all don't say the same thing. We're all not just rotely copying each other one for one, so it's just the same PowerPoint presentation over and over and over again. We don't do that at all. We all agree on the same 5 or 6 core principles, right? High volatility, high probability, selling options rather than buying options, etc. But the way that we actually explain that and the way that we implement that is different for everybody. And so as someone on the other side of that, as someone in your audience, that can be very frustrating. But if you can get over the initial hump of the overwhelm, what that's going to do is it's going to give you different perspectives on the same thing, like, you know, short delta or a put ratio spread or whatever. And then little by little, you'll start putting in more puzzle pieces into the puzzle. And then that will help you kind of reach that level of mastery that you're after. But I would start with 1 or 2 of the hosts on the network and just really sink into their content.
And that's interesting. You know, seeing similar things from a different point of view, you could call it the New Testament.
Yes, you could. That's pretty good. I would copyright that. Yeah. Oh man, that's pretty good. I may use that again.
Good stuff. Right, Dr. Jim, it's been an absolute pleasure. Thank you so much for joining us. And I know the people out there watching from London, from the UK, from Europe, there's going to be an invitation to you, sir, to come across and do one of your magnificent teaching sessions in London at some point. Would be wonderful to have you.
I can't wait. That would be so much fun. Thanks for having me on, Rich. It's been really great.
Good stuff. Peace.